Welcome to Trading Lounge and the US Indices. We'll just be looking at the S&P in a little bit of detail. So this is 100 ticks, this chart here, and we've been looking for a top to come into play. I can't confirm that we've got a top in place just yet, because what we would need to see is from the top here, we would need to see 5 waves down here, and currently you can see roughly here that we've got 3 waves down. In fact, that would need to play out a little bit more here. So from the top of this one here, we would need 1 and 2 here, and 3 here, and 4 here, and 5 here, just for that 3rd wave here, okay? Then we would need the 4th wave up here and the 5th wave down. So we're still a fair way off of actually having an impulse wave to the downside. We don't have that yet. Also too, in regards to the trading levels, then we've got the 800 here, which is significant, and I call that a minor level, and then we've got the sub levels here, 1, 2 and 3. So normally what I find is that with the sub levels here, 1, 2 and 3, when we get to the number 2 here, if the number 2 here becomes the retested resistance, then it normally appears that once that becomes the retested resistance, then the market will be pulled down to the closest largest number, which is this one here. So if it comes down to this one here, then we would probably have a top in play. So the next question is what type of top, and we're going to look at that next. So the first thing is to really understand that we would need to see an impulse wave down here, and we don't have that yet. So what we can do, as I just mentioned, if the 2820 becomes the retested resistance, if you have difficulty in counting the 5 waves down, if this number here becomes the retested resistance, then you'll that can help you confirm that that's the case. But otherwise, this is still, even if we get one more low down onto the 20 here, then that would still just give us an A and a B and a C wave down to this point here. So I can't confirm that we've got a top in place. I'd need to see an impulse wave to come down at that point there. Next, I want to talk about the trading levels and the patterns that happen at levels. Okay, so in a nutshell, what can occur at a level is that a market can come up and hit a level and then never come back and drop straight through it, just drop down, never come back. The other thing that it could do is it could just go straight through the level and, not even blink. Okay, so those two things haven't happened, so we can wipe them out. So the next thing is that we would have some type of correction at the level here. So that's what I want to talk about. One of the first patterns is that it's called an overshoot. It's only I put it down to 3 patterns. So this is the first one here. This is what I call the overshoot pattern, where it comes up to the level here but doesn't stop. It just comes straight up here and creates the first high above the level. And we know that in the S&P that's not the case, because we had a corrective move here. But while we're here, I still want to talk about it. So normally when it doesn't stop here and just goes straight up here, then normally the distance above the level it goes is normally the swing low as well in that distance. So the distance above, as a rule of thumb, would be the same distance as below here. And what it does, it works across this level here. If we just pretend this is the 2800 area here, then a market would not stop here, exhaust itself, drop down in that exhaustion of the same weight, and then it pretty much finds this level as a balance point here eventually, and moves up and above the level and tests it, and then we would find our entry coming through the top here and then going long there. So that's one of the patterns, but it's not the case in this one, because the market stopped here and dropped back down through here. So the market had the arrival here, then the reaction here. So in that case, then this pattern here is what I call the classic trading levels pattern, And you don't need to know Elliott Wave for this, and that's the good part about it. All you just need to understand is these things here. So the arrival at the level, so we'll call it the 2800 here, and then the reaction from that level, and then 5 waves up here for the first high above the level coming above the 2800 here. So currently with the S&P, we've got the arrival, the reaction, and the first high above the level. And then what normally happens, we would see an impulse wave down back into the level here, and that's what we just talked about. We don't have that impulse wave yet. We probably get it, but we don't have it yet. So we have to move with the evidence. If you don't do that, you're always going to get caught out. So in this case here, we would need to see 5 waves down here, and then there would be a bounce here, and then it would go through here. Now, if we were ever going to go long again in the S&P at the 2800 area here, we would need to see this market move up through here, create the first high above this little level, and then drop back and then move up here, and then that would be our entry point over here to go long on the S&P. Okay, if the market was going to continue to be bearish, because this is actually, I'm explaining a bullish pattern here, but if the market was going to be bearish and continue to move down, then after this high here, it may not make the high here, it may just retest the number here, 2800, which is normally the case, and then move down again from here. So what this simple pattern does, it keeps you safe, and it also gives you the nice entry here as well for the long side. There is a variation on this particular pattern here, and that's what I call it. It's the classic trading levels pattern, but just a variation, and it doesn't come back down on the level here. It's more like some walking up the stairs. So in this case here, we have the arrival, the reaction, the first high above the level, but normally then we'll have 3 waves in this first instance here, coming down and finding support here, and then a bounce and coming back, and then we enter here. We'll always enter on the high here as well. In this case, this is also a bullish pattern. So this is also possible with the S&P 500, so we can't rule that out. And what we do is that this high here, that becomes our reference point high to go long again, and then we can also draw one up here as well. So in this case, coming back here, the same here, we use this reference high here to go long over here, but we can also get a better entry over here. So I'm saying this here because we've got the arrival, the reaction, the first high above the level, and what we could see here is we could see 5 waves down to here roughly, a bounce here, coming back up 50 or 60%, and then a move down here. Now, if it moves down here, we also know that we've got, when we're working with a level, in this case a minor level here, we can come down to group 2 here as the support, and group 1 above, 1, 2 and 3 here above. So what it's really trying to do here is it's trying to find support on top of group 1, the 2830 here. If it can't find support here, and like I mentioned, if the 2820 becomes the retested resistance, then the market's just going to be pulled down into the 28 at that point. It's okay for the market to come down to even 10 here and then go back up, but if it finds that as resistance here, then and fails, then you know that we're in a bearish point. So the number 2 here is really important above the level. That's why you can use it for, and also support on top of group 1 here, the number 3 here, the 2830. The next levels down to the micro levels, so that on top of 30 here, 2830 would be 1, 2 and 3 again. That would be the micro levels there. So 33 would be the long trade on that case. So here we don't have support on this level yet. So it's something that we could do it because we don't have 5 waves down here just yet. We can count 5 waves up here. That could also expand and go up, so that's what we need to be mindful here. But normally a market, once it does this here, has the arrival, the reaction, the first high above the level, it's in sort of exhaustion mode here, and we can start to see that the trend was really strong here and strong here as well, but not as long as it was here. So in a way, it's becoming strong, and it's quite strong but short here and weak, and then it's creeping up here. So it's a bit of a sign of weakness in that case. So in this case here, if we get, there's a couple of things here we need to look at now. Is how far can we come down? So from this level here, if we look at this point here, one of the first things that we need to do is look at the 50-60% retracement level, which is still within group 2 here. So it's possible that all of this up here could just be wave 1, an A and a B and a C for wave 2 to come back to this point and then move up through there. And then it would be at those patterns that I just explained a little while ago, those here would come up to this level here, it'd come back to here, then it would come up to here, and that would create the first high above the level here, and then it would move up from there. So that becomes the reference point here to go along on, and so this. But we're above, we need to be on the right side of the market. What does that mean? For me, it means to be on the right side of the market. It means to be on the right side of the closest, largest number as a support. So this is one thing that could happen. We could look at this as not wave 5 top here, but wave 5 top may not be in. We still have 1 and 2 here, and then 3 and 4 and 5 going up through to here to get the next top. So that's all possible there. If this market was going to be bearish from here, then what would normally occur, we would still come down and get a bounce here. Might come back to the 20 or whatever, and then move down through here. Then it would retest the supply here, sellers, and then move down from here. So in that case, then this low here becomes the reference point low to short, and that would be the safer bet. Because you really want to be outside of group 2 here for any sort of short trade here. So yes, so first of all, the market, we need to prove that it's coming down in 5 waves. If we get 5 waves here, then after a correction, we'll get another 5 waves to here. But that's not going to help us that much. We still could get trapped here and the market can move up from that point. Okay, so you need to be mindful of that, of this number here, the 2772 here. To that number there. Okay, so that's the first step. Okay, first step is, do we get 5 waves here? Second step is, do we get past this 3-wave structure at the 61.8% mark here? If this number here becomes the resistance, then we need to look how further that we can come down. Okay, so let's have a look at how far we can come down on these things, and also the large account to the upside as well. So we might just do that first, actually. So where are we going to be here? So let me just work out, we'll start from here. So this market could be like this here. We know that this move down here is an A and a B. Whoops-a-daisy. Bit dyslexic. I hope not. I think it's just an excuse for not thinking. But we've got this corrective pattern down through here. Now, there is some folks that are looking at this in different ways. I haven't seen everybody's count out there, but people send me counts and we have a bit of a look at them. But logically, this would be an A and a B and a C for the A wave here. So this move up through here can also be counted in different ways. So we can count this as 1 and 2 here, and then wave 3 and 4 and 5 here for wave A here, and then across here for wave B, and then 5 waves up here for 1 and 2 and 3 and 4 here and 5 here. This count sort of bothers me a little bit. First of all, wave 4 here overlaps wave 1. And secondly, over here, the wave 3 here is the shortest out of 1 and this one here. So there's 2 little problems with this particular count here in counting it that way. Okay. Yeah, there's other people that have counted this. This is a bit of a long shot with wave 1 here, and an A wave over here, and this is the B wave here, and then a C wave up here for a larger wave 2. So wave 1 here, an A and a B and a C for wave 2. It's a long shot. It's possible. I can't, throw it in the bin or anything, but it's just a long shot. There's other people that are counting all of this down here as wave 1 here. I can see how it could be counted as wave 1, but not in the way that they're counting it. I could see that we could look at this as wave 1 and 2 here, and then all of this here as the third wave down to here. So 1 and 2 and 3 and 4 and 5 for the third wave, and ABC for the fourth, and down for the fifth here. So that's possible as wave 1 here. But like I say, the correctional count up here doesn't really count very nicely in that instance there. But yeah, anyway, I like to have a look at all the counts and have a look at all the, the pros and cons of each count. So let's just drill down a little bit further. So then there's this count here. So with this count here, in counting 5 waves up through here sort of bothers me a little bit, because this making this wave 3 here the shortest. So I'm a bit sort of not in agreement with that. Also to here, if we looked at this as wave 1 here, and this is the length of wave 1 here, then we put this on the low of wave 2 here, which is this other yardstick here, then wave 3 here is really shorter than wave 1 here. So this is wave 3 shorter than wave 1 here. So that doesn't really sort of add up either in that case. Don't have a count on this one. What's this one here? This is one of the primary counts that we have, with wave 1 and 2 here and 3 here and 4 here and 5 here. But like I said, wave 3 here is a bit short compared to the other guys here. So it's a bit of a problem there. And also to this wave 4 here, I know that's okay. That gives its clearance here. That's all right. Yep. So that wave 2 really should be there when we're looking at these things, because when we look at the SP 1000, we can see that we've got an extra low here for that. So it's better suited here. And plus, it doesn't count very nicely with 5 waves here, such. So this one here I kind of like a lot, really, because it doesn't break any rules. Okay, so this one here is wave 1 and 2 here, and then 1 and 2, and from wave 2 here all the way up for 3 here for this one, with wave 1 and 2 here. Like I said, that one can actually go here, 3 and 4 and 5 here. The problem with this one here, though, the problem with this one too, is that when we're looking at this move up here, this would be wave 2, wave 2, wave 2. So this would be the third of the third of the third here. So we'd expect that to really be powerful here. It was pretty powerful, but I just expect it to be more so, like really moving straight up into this space. So, so that's a problem. So in a nutshell, what we can do here is we know that if we've got a top in here, like we can't even prove that yet, right? We know that one case here, from this low here to this high here, we know that the 61.8% is here. So we've got that as a target area here. We can just put that in here, the 50-60% area in here. So that's a real possibility, right? So that's one point that we could look to. If we were looking for wave 4 to pull back from the low of wave 2 here, the 38.2% here, and take that in as a top here, then the 38.2 is here. So we'll either pull down to the wave 4 of 1 lesser degree, or to the 38.2%. So pretty much at the 2700 area here, that would be where that would be at that particular point. So that's there. And the third one that we've got here is that if we do count this as 5 waves up to this point here, then we would need to be looking at this as a 50 and 60% retracement level down at this point here. So these are all the target areas, and of course, if this is an A and a B and a C up here, then we'll take this low out here. So these are the target. They're pretty much all the counts that I can come up with that are reasonable. And there's problems with most of them, but they're small and so on. So, but look. It just points out that we've got this space here, and this space here that the market can come down to. So if we're going to trade against this trend here, we need some evidence that there's a turn in the market. And like I say, to be on the right side of the market at the right time, to get your timing right, we need to draw ourselves closer to the closest largest number, which is the 28 here. So really, to be short here, we need this number as the resistance here. And that's what we really need to look for at this point. Otherwise, this is quite a bullish trend and we'll just be trading against it with no evidence whatsoever. It just doesn't make any sense. This little move up through here could be counted in different ways as well. We know that each trend's got a beginning, a middle and end, but and we can see that the ending structure here is in creeping phase, where it starts to creep and get overlapping wave structures here, and we've got this move down here. The other point with all this too is the equinox on the 21st of March. So that's coming now. So the market, not always, but in a lot of cases it can turn on the equinox. That's a bit of astrology in Gann sort of trading, so all the Gann traders will be getting pretty excited about this particular date. But I've seen it come in before. I've seen all the Gann traders, all the volume come in, and then they all get caught out, and the market continues to move up again. So, yeah, like I say, it's possible to have a top in, but we really need to be clear on what's occurring in this space here. So, look, I'm just going to leave it at that. One thing before I go, though, is we need to just have a look at our trades here a little bit. So we've been long and we've been moving the stop up through here. So I'm just really going to bring the stop up and just put it under here for this. We need to protect, we've been long through here. We can also go short here as well. So what I'm going to do here is I'm going to put this in a thin line here. So it's just, say, half a position here. And what we're going to do here is we're going to understand that I know that the market can come down through here for one more time. So I'll just forget about that for a moment. What we want to see here, we want to see the market would bounce off this, come through here and come back up through here. So if I can just move these out of the way here. So what we want to do here, if that becomes the retested resistance there, we're looking for that reference point low. So we don't trade the breakout. We're looking for the retest here, and that retest should be on lower volume than that previous trend down too, if you want to look at the cash or the futures. And also, if that breaks there, then that triggers that trade there. So we'll just leave that there, and we won't add to the position until we get down here further for this, and we've got a better idea of what we're looking at. But it's all very risky trading in the space of group 1 here and group 2 in a change of trend at this particular stage. If this becomes the support here, then if we just simply take, if we're looking for long trades, we can just take that distance here, look at the 61.8%, which will be in here. If that becomes the support, then you can trade from that point there. So we gravitate over to the closest largest number, which will be the 40 here. If that becomes the support, copy that. If that becomes the support here, then we can trade long from that point and we'll be in line with the trend at that point. So, and once again, the same thing here as well. We'd see the market come up for the arrival, the reaction, the first high above the level, and then the corrective move here, and then up through here. So that would give us move that to there. That would be our long trade at that point. So, yep. Okay. Yeah, just to sort of recap a little bit, it's a lot of folks don't like me giving lots of counts, but I think that it's actually part of the process of analysis, and I like to share that. I like to share what I'm thinking. So yeah, don't bag me too much about that. I think it's worthwhile trying to, and I mean, there's other fantastic Elliott Wave people out there as well. And it's good to gather all the counts and look at them and explore them together and, you know, and see what we've actually got. So I'll leave it at that. Thanks. Cheers.